Hey guys, so one of the things that's happening right now is we have a lot of individuals that are getting into the gig economy or doing gig work. Whether you're an artist or you're making deliveries and you're picking up people or you're picking up items and delivering them somewhere or transporting them somewhere, whatever that is for you, that is something that is really, really prominent right now. And that's amazing because it gives you an opportunity to be an entrepreneur and set the limit for your income, right? The income potential is extremely high. But one of the things that we want to make sure you don't do is overpay in taxes. So one of the things that you need to make sure that you have in place is a solid accounting system. And when I say solid accounting system, I'm not talking about going out there and spending thousands of dollars working with a professional or buying this big elaborate accounting software system. No, you can easily find something that is very manageable, some type of cloud-based system. And at a very minimum, you can absolutely go out there and just use a spreadsheet, Google Sheets, Microsoft Excel, something to where you're tracking your expenses and your revenue on a regular basis, right? Get something in place. And then also, if you're utilizing your home or you're utilizing your business, your vehicle for your business, you want to make sure you're taking those deductions on your tax return, right? Guys, listen, call someone, reach out and say, hey, this is what I'm doing. Does this make sense? You may have to pay for that, and that is okay, because if the ROI is greater than the expense, then it's very, very necessary and reasonable. But guys, listen, so if you're using a business vehicle, right, you have a vehicle that you're picking up people, you're picking up items, and you're delivering them or you're transporting them, you can absolutely take a mileage deduction or take the actual expense deduction on your tax return for that. Now, what clarifies the difference between the two is if this vehicle is solely for business, you can absolutely take 100% of all expenses that are associated with that vehicle. But if there's any mix of business and personal, then you're going to want to go the mileage route. And that's where you're tracking your mileage and you're taking the deduction based on the allowable rate that the IRS has put out there. Now, if you're doing that, you absolutely want to make sure that you're tracking where you're going, why, your mileage when you start and when you stop. These are the things that the IRS is going to ask for in case of an audit, and they want to be able to substantiate these miles that you're taking. All right. Another thing that you have to do is consider your tax liability throughout the year. Don't wait until it's time to file your taxes to start thinking about how much you may potentially owe. Hopefully you don't owe anything because you've tracked your expenses, you've done it the right way. But you want to make sure that you have that accounting system in place so you can look at your bottom line throughout the year to see what you would potentially owe in taxes. Hey, stay tuned because next we're going to be talking about entities and how they can impact your tax liability. We'll see you next time.